Welcome, guys. Thank you guys for joining us today. This is our financial education series. It's our second part of a three-part series. So today we're going to be going over how to understand your credit score, and we're joined with Carol Urton. She's the director of the Corporate Responsibility and Sustainability for Experian. She's responsible for Experian's community investment and sustainability strategies. She also serves on the global committee for the advancement of Experian's commitment to financial health for all. She's a published author and an accomplished speaker whose goal is to inspire people to achieve their full potential despite hardships in life. And I'll go ahead and turn it over to Carol right now. So yeah, if you can take over.
Great. Well, welcome everyone. So excited to be here today and to see you all. And thank you for that great introduction. I think that was a lot of words to say that my priority in my job is to work with nonprofits and communities and really help people out there understand their financial health and the things that are available to them to help improve credit and financial wellness. And so that's really the mission that we're on. I'm going to share my screen in just a minute. And when I do that, I think my camera stopped sharing for some reason. So I will go through the presentation and then I'll come back at the end and we can take questions and just chat about things that we may need to expand upon further. But I really appreciate you all being here today. And just a little background on me, I started out in my early career in the mortgage industry. And so I learned all about credit when I was very young. I was 18, 19 years old. And I learned about that through a temporary job that I was doing that turned into a full-time position. And so I went through life thinking that everybody understood credit, and come to find out through the rest of my journeys that credit can seem confusing to people, and they don't really understand how all that works behind the scenes. So I'm super excited today to kind of clarify a lot of things, hopefully take the mystery out of how credit works for you or against you, and how you can make it work for you all the time in a very positive way. So I, again, spent a lot of time in the mortgage industry, but also really had a heart for nonprofit and doing volunteer work on the side. And so I've done a little bit of both. I've worked for nonprofits, I've worked for big corporations. And when the job at Experian came up where I could really marry my corporate work with my volunteer work or my community interest, it was just kind of the perfect fit. And so as you're out there looking for jobs, sometimes just if you have different things that you do throughout your life, sometimes that just winds up in a place where you're really doing something that you love. So with that, I'm going to share my screen. Bear with me just a moment while I get it set up. My system's taking just a second. I know it's happening though because my camera went off. You can still hear me though, correct?
Yes.
Good. So while this is happening, I've got the little spinny thing going on, so hopefully it's going to pop up here in just a second. But a little bit about Experian, and there's a couple slides on this. So when I pull the presentation up, I'll just kind of blow by those slides. One of them talks about my bio, and then the other one about Experian. But we are a global company. A lot of people don't know that. We have over 17,000 employees across the globe, and we operate in, I want to say, 46 different countries. So in my job, I not only work in North America, but I really have the opportunity to work on a global team. And really our mission at Experian is to help everyone have financial access and to be able to improve their financial health. And so I work on a global team that does that in other countries as well. I'm going to hit my escape button here real quick because my screen is totally blanking out. If for some reason I can't get this to work, oh, here we go. We're up. All right. Crisis solved. All right. I am
Carol,
going to
I don't think we can see your screen.
Okay, it's popping up. It's taking just a minute here. Can you see it yet?
No, not yet. Oh, is she? Carol, you still there? Oh no. All right, so it seems like we're just experiencing a couple technical difficulties right now. Give us one moment. All right, I think we lost Carol. Give me one moment.
Okay, I'm back. Can you hear me?
Yes, ma'am.
Okay, great. Sorry for the delay. I got totally kicked out. So I'm going to share my screen again, give this a try. If we have difficulty again with this, I will just go through the presentation verbally and try to give you good visuals.
And Carol, if need be, I can always share.
Yeah, we may need to do that. So I appreciate everybody bearing with us here. Yeah, it's not letting me share my screen. Amanda, would you be able to pull up the presentation?
Sure, definitely.
Great.
One second, guys. Okay, give me one second. I apologize, guys.
You know, it's just popped up for me. Shall I try it again?
Sure.
Okay. Okay. Can you see my screen?
Yes, we can. That worked.
Awesome. Okay, great. Well, thank you everybody for bearing with us on that. I know that was a bit exhausting, probably waiting for us to get started here. But again, this presentation is called Give Me a Little Credit. And again, we kind of went through my background a little bit and Experian and just what a great company it is. I'm so happy to be able to work at Experian because it gives me the opportunity to work with great people like you and really do some good in the world. And I think that's, you know, been my passion, you know, just my whole life is just really coming alongside people that could use a hand up and help just share my experiences. And again, you know, I learned about credit at a very early age, but not everyone does. And so hopefully this presentation will again demystify some things about credit. Very quickly, I have to do a little disclaimer. There are some regulations around what Experian employees can and cannot do when it comes to talking about credit. And so we're going to give you some very general credit information today, rather than answering your specific questions about your personal credit. We can't talk about your personal credit report. We can't advise you how to improve your personal credit. But what this information today will do is help you understand how to manage your own credit. And again, there are just some legal guidelines around us being able to help you with that. We have actually a call center with people that are experts that can help people with their personal credit. So today we'll go through the basics and then hopefully be able to answer questions that you have around the basics of credit. So the first thing is, what is credit? And I know that may be a simple question, but there are a lot of different theories that are out there about what credit actually is. It's really just obtaining goods or services and paying for them at a later date. And this is really important, under agreed upon terms. So when you get a loan or a credit card or buy a car or rent a house, whatever that may be, there are always terms attached. So you want to make sure that when you're opening credit, you know what those terms are. And so again, credit can help you with credit cards, mortgages, car loans, service contracts, cable television. You probably have all had to have your credit run when you got a cell phone. Sometimes utility services will run your credit. And really, credit is your financial references. So when you're building these different things on your credit, you're actually building kind of a resume, so to speak, of how financially sound you are and how well you manage your finances. So credit doesn't really equal debt. I think that's something that people automatically think, that if you have credit, you have a lot of debt. It doesn't have to be that way. You can get a credit card, open that credit card, charge things on it. You can pay it off every month and incur no finance charges. So if you pay that balance in full every month, you are not going to get charged any interest. It also gives you buyer protection. It helps, again, build your credit, and it keeps track of everything that you're spending. So as long as you pay that card off every month, it's a great way to use the bank's money, keep track of your expenses, and have some protection around what you're buying. And so you don't have to incur a lot of debt to build up a good credit file. And that's important. That's important not to get into a situation where you can't pay that back, because on the reverse, if you pay the minimum payment on those credit cards, it's going to take you years to pay those balances off. So knowing what the terms of your credit are is very important, and knowing that it doesn't have to equal a lot of debt. So there are three major credit bureaus out there: Experian, Equifax, and TransUnion. And they are national credit reporting databases. And so it enables instant credit approval. It makes credit lower cost anywhere else in the world. It provides access nationwide, and it lets you purchase almost anything you need using credit. And so the three bureaus are where all this data is stored when you open credit. So again, it we think Experian is the best, of course, but these three bureaus are the ones that store your credit, and they're agencies that lenders use to access your credit to see if they want to loan you money. So the credit cycle, it starts with, of course, you opening a credit card or some other form of credit, and you pay the lender. So what happens then? The lender updates the records, and then they share it with the credit reporting companies. And then the credit reporting companies share that with new lenders. So let's say you open a credit line and you pay on that well, the lender's going to update their records, they're going to tell us that. And then when a new lender wants to decide whether they want to lend money to you, we have that on your credit report. We share that credit report with those lenders, and the lender makes the decision on whether they think you are a good credit risk or not. So credit reportings are sort of like libraries where we store the information. We don't write the information, we just store it. And so credit reporting, our clients, they send us the information, we store that information, and then we lend that information back out only to people that have permission to use it. So not anybody can have access to your credit report. There are certain parameters in which a company has to fall in order to get your credit. So there are they have to be a licensed business. They have to have a contract with Experian. So all the lenders out there are clients of Experian, and so they have to have a contract with us to be able to access and report data and things like that. And so again, we don't make judgments on your credit. We just store that information. So when you're either approved or declined for a loan based on credit information, we're not making that decision. It's the lender that's making the decision based on the information we have given them. And so I know there's a misconception out there that the credit bureaus may be the ones that are turning down the loans, but we just supply the access to the information. If you've ever been turned down for a loan, you'll know that you get a form that tells you where you can access the credit information that they use to make that decision. And that would come from whatever bureau they use to gather that information. So the Fair Credit Reporting Act, these are the permissible purposes in which people can pull your credit. So either to open or manage credit accounts, and that's, when you're out there applying for credit, offers of credit, sometimes employment purposes. Now, not all employers will run your credit when you apply for a job, but some might, depending on the type of industry that you're applying for. So it's really important to maintain a good credit history because it can affect so many different areas of your life. It can affect the ability to rent an apartment or get a job. It might require you to make a deposit for utilities or cause you to pay higher interest rates and service fees when you have poor credit. And I know that sounds very unfair. I was in the lending industry for a very long time, and I never could quite understand why higher rates were charged to people that were struggling. However, it's based on risk. And so we're going to talk about that today. Just, you want to be a good credit risk. And so hopefully throughout this presentation, you'll kind of learn the tools that you need to become a good credit risk, or maybe you already are. Or perhaps you don't have any credit. So we'll talk about all those scenarios as well. But you'll see that there are a lot of different areas here that are used to take a look at your credit. And again, this one here that talks about underwriting insurance. So that may seem odd to you that it would be used for underwriting insurance, but there were actually some studies that were done that talked about people that had poor credit were a bigger risk. And they did actual studies that showed that somebody with poor credit was more likely to have problems with their insurance, car accidents, tickets, things like that. And it may just, be due to the stress of financial stress. I don't know what the actual outliers were, but again, it can, affect your car insurance as well. So those are some of the ways that, people have the opportunity to access your credit. So defining credit reports and their importance, when we're looking at what is a credit report, and I don't know if any of you have actually seen your own credit report. We're going to talk about how you can get that on later on, but your credit report is really your credit history. And if you've been, like I said, if you've been turned down for credit, you'll know that there's a disclaimer there, or not a disclaimer, but it talks about, where you can get your credit report. So that's one way to get your credit report. But it's really your personal credit history. And so it keeps a record of your financial accounts. It is called a credit file or a credit history. And credit reporting companies, again, collect and organize the data just about your credit and your public records. So when we talk about credit, there's really three different levels. So there are credit invisibles, and that would be someone who has no credit at all. There are thin file people who have very, very limited credit. So thin file is, maybe there's not enough credit on your credit report to have a lender make a determination about whether you would be a good credit risk or not. And then we have thick file, which is somebody who has a lot of credit and a history of using credit out there in the world. And so again, why is it important? Lenders use credit reports and scores to gauge the likelihood that you're going to pay back a loan. So what they're looking for is, whether you are, again, a good risk. And credit scores, I won't say they're new, but they've been around for a while. But when I first started in the mortgage industry, we didn't have credit scores. And so what we did is we took a look at the credit reports manually, and we made a determination based on what we could see, whether we thought you would pay your loan back in a timely manner or not. And so we would take a look at these credit reports, and if we saw a pattern of somebody not making their payments on time, we determined that the likelihood was that they wouldn't be able to pay us back on time either. And so that's how credit can really affect your ability to get more credit, buying a home, a car, renting a house. The lender is really going to take a look at whether you're a good risk or not. And then credit scores came into play. And so now, rather than physically looking at a credit report, the credit scores kind of determine, what range you're in, right? Whether you're, a poor credit risk or an excellent credit risk. So for instance, if you had a 500 credit score, that's on the low side. If you have an 800 credit score, it's going to be on the very high end. So reports, again, are used in a lot of different situations, and it really is your financial reference to the companies who you want to do business with. So the players in the credit cycle, well, the most important player in the credit cycle, of course, is you. So you decide how much credit you have, how much credit you want, whether you want credit at all. I mean, if you did not want a credit report at all, you would just never apply for any credit. But that can make things difficult in your financial life on down the road. So you're the one that determines, whether you're going to have, how much credit you're going to have and how you're going to manage that credit. Of course, the credit reporting companies, lenders, and the risk score modelers. So we'll talk a bit about that. And then the government, like I said, there are some restrictions around, what I can talk to people about as far as their personal credit, because all of this is regulated by, it's called the CFPB, which is the Consumer Financial Protection Bureau. And it really is an agency that kind of oversees everything about the bureaus and credit. And so the risk score modelers are, there is not just one credit score. So when we talk about credit scores, that's where I think people can get confused, because credit scores are different depending on what kind of loan you're applying for, when you pull that credit score, and what credit score model is being used. So again, we'll go over that in a bit. So the information, of course, comes from you. We get a lot of complaints, I would say, not complaints, but people wonder, why the information on their credit report, their name is spelled wrong on an account, or, some aspect of their credit report. So we never change anything on a credit report. Again, we only store the information that comes to us. So if you fill out a credit application and you use really, really poor handwriting, and somebody can't read the information and they're entering that information into a computer for a credit account and they spell your name wrong, that's what's going to come over to us. And we can't change that. We can't change anything that the lenders send to us. So if there is an error on your credit report, either the lender has put the information in incorrectly, or possibly, the information just somehow wasn't legible to them. And so you can change that with the lender, and then the lender can update our credit records. So what's in a credit report? So again, identifying information. And so identifying information is going to be, it's going to be your name, address, date of birth, social security, which helps the lender to find your information, of course. And then employment records are not updated in your credit report. You may see some of your previous jobs on your credit report, but that data is not updated regularly. So for instance, when I pull my credit report, it'll have some of the past employers that I've had. It doesn't have all of them. So it's not really a perfect history of your employment, but it'll have your account information. So it'll have the original loan balance, so the full balance, it'll have the current balance, and then it'll tell you, how that is being paid, whether it's being paid on time or not. And then it'll have bankruptcy public records, those go on. Inquiries are when you go out and you search for new credit. That shows up, whether you get the credit or not, it'll show up as an inquiry on your credit report. And then it also has dispute instructions. So that's important to have handy in case you ever find something on your credit report that is not accurate, it's not yours, something's gone wrong. It has information on how to contact the bureaus for a dispute. So what's not in a credit report? So it doesn't store criminal background, medical information, your buying habits, your income, your bank account information, or your credit scores. So credit reports and credit scores are two completely different things. So when you ask for a credit report, you're not necessarily going to get your score, depending on what process you're using to get a copy of your credit report. So a credit report is the information about your history, and a credit score is a calculation that is done with these modelers that take a look at some different aspects of how you're using your credit to come up with that score. And we'll go over that specifically. But every credit report doesn't come with a credit score because those are two different things. Rental payment history data. Experian was one of the first bureaus to offer rental reporting data. And the reason why that's important is rent data typically is not on a credit report. And so sometimes bad information would wind up on credit reports about collections or rental payments that weren't made on time, but there was no way to report the positive rental data. And so there is a way for you to report your monthly rental payments to Experian so that your credit that can be counted in your credit score. And so the way you do that, your landlord either has to be signed up to report rental data. If your landlord doesn't do that, then there is a way for you to sign up with an agency that works with Experian to get your rental data reported. And so if you need that information, we can definitely get that to you. But if you're have no credit, or you have a thin file credit, or you just want to improve your credit and you do pay your rent on time every month, it's a great way to increase your credit history and looking at what type of risk you're going to be. Experian Boost is another product that Experian, not product, but it's a feature that Experian has that will take a look at not just your rent, but it'll take a look at your other things like your Netflix streaming, your utility bills, different things that are generally not put on a credit report, because you should get credit, right, for paying your electric bill on time, for paying Netflix on time, your cell phone bill, all those things that you pay that aren't typically reported to a bureau. It doesn't count. And so Experian created Boost, which will attach with your records so that you can report that and improve your credit score. And it says here that most effective for people with thin credit files or a credit score below 680. The average credit score boost has been 13 points, but it's all over. You know, some people get more, some people get less. If you have really, really great credit, it may not affect your credit at all, but it is a great feature to use to help get that credit score up. And, you know, just a few points might make the difference of being able to rent a house or buy a car or get a better interest rate. And, you know, the better interest rate is important just in your overall financial health because that determines, of course, how much money you're using to actually pay down your debt or just pay the interest on a debt. So initiating a dispute, again, we really encourage people to get a copy of your credit report before you initiate a dispute. That way you can take a look at everything. There's a toll-free number on the report, gives you access to customer service. And so our Experian people will take you through the process of doing that dispute. And so what we do is I shouldn't say we, it's not my department, but what our call centers do and the people that work with the disputes, they have to verify the information with the lender. So when you dispute anything on your credit report, they're going to take the information that you give them and they're going to verify it with the lender. And then it takes about 30 to 45 days for that to happen. They verify, correct, or update. And then it's all done through a secure encrypted electronic system. The consumer, so if for some reason your dispute does not get resolved, you can add a statement of dispute to your credit report so that when somebody is looking at that, they can see why you feel that that's not an accurate ding on your credit report. And so that's something to keep in mind, that if it doesn't get resolved for whatever reason, and it should get resolved if it's an actual error, it'll get resolved. But if there's a reason that you need to attach for your credit report, you can do that during the disputing process. So how long is information kept on a report? So it depends on what type of account it is. So your open accounts in good standing, it's just gonna be on there forever. Closed accounts in good standing, 10 years. Late payments, 7 years. Collection accounts, the same. Bankruptcy for Chapter 7 is 10 years, and Chapter 13 is 7 years, and then credit inquiries for 2 years. So when you close an account, it stays on your credit report again, and it shows that it's in good standing. But when you do close accounts, what that does, and we'll talk about, again, how those scores are calculated. You know, the scores are calculated on how much available credit you have. So if you go in, if you have a great credit report and you decide you don't want to charge on any more of your credit cards and you go and you close them all, what that does is it lowers your available credit that you have to you, and it could lower your credit score. So you want to be really careful about going in and closing accounts unless it's really, really necessary. We're going to talk about some common myths about credit reporting. And so here are the myths. We'll go through them. When paid, the bad debt will go away. So we just learned on the previous slide that actually, even though you pay it, it's going to remain on your credit report for that 7 years. The credit reporting company denied me credit. We talked a little bit about that as well. It's not the credit company that's denying, it's the lender. I'm not responsible for those charges on our account. And I think the next two bubbles here are really important. So if you have joint credit with someone else and you make an agreement that they're going to pay the bill, or you're going to split the bill, or you're going to take turns paying the bill, and the other person doesn't do their part, you're still responsible. So when you co-sign with someone, you are ultimately responsible for that debt. And so you have to make sure that you're really aligned if you're co-signing with someone else, again, because you are ultimately responsible whether the other party pays or not. A divorce decree separates joint accounts. That is not true. So if you have a divorce decree and the accounts are split, or you are absolved of being responsible for a debt, it doesn't mean that it's going to be absolved with the lender. So you have to go to the lender and either get that account closed or redone with just the ex-spouse on that loan. So you have to deal with that with the lender. The credit bureau can't do anything for you because, again, we only report out on what the lender reports to us. So unless you get yourself off that account, it's still gonna affect your credit. Consumers must give their permission for a report to be issued. Not true. We went over those instances where credit reports can be pulled. So it has to be permissible use, but people can, or agencies can go in and pull your credit report. Requesting your own report and pre-approved offers harm your credit history. Not true. When you go in and order your own credit report, that's it's not going to count as an inquiry. And there's only one credit score, and it is on every report. And so we talked a bit about that too. Credit scores differ depending on the situation. So what is a credit score? Well, it's used instead of a manual score sheet. And I talked a little bit about my early lending years where we physically looked at loan files to decide whether we would loan money to people. Now, mostly everything is automated. And instead of having a tally sheet of how much good and poor credit, the balance there, it's really done by credit scores. So it's a risk management tool, of course. Again, we've talked about many different models, and credit reporting companies often apply the model selected by the creditor when delivering the report. So it depends on what they want. And so the credit scoring model or formula is really, it's the proprietor owns it. So the modeler, whoever owns that modeling score system, that is, again, that's owned by them. It's not owned by the credit bureaus. So risk factors are key, of course. It's generated when a risk score is calculated. Again, we've talked a bit about this. While there are different models out there, they're pretty consistent in what they're looking for. And I'll tell you, the number one thing that they're looking for is that bills are paid on time. And we will go through just a really helpful list. I hope if you are taking notes or if you want to take notes later, there's a good list at the end of the presentation that's going to talk about, exactly what you can do to manage your credit. So this is called Vantage Score. So you've probably heard of FICO score. Vantage Score is a different scoring model. And again, there are different models out there. But here is an example of what it's looking for. So payment history, you'll see 40%. So that's whether you're paying your bills on time. The utilization, which is how much you use your credit, 20%. Balances will be 11%. Depth of credit. So that's, when we talked about credit invisible, thin file, thick file, it's just how long you've had credit, how much credit you have. It takes a look at all of that. Recent credit is 5%, and then available credit, 3%. And so all that goes into this model to come up with the score. So improving credit scores, again, there's no magic fix. It's going to take time. If you have someone telling you that they can fix your credit for you, unless there are errors on the credit report, that's probably not going to happen. So errors can be fixed and someone can help you do that, but it really takes time to improve your credit. So I think that's, where the hope is in all of this, is that you are in complete control of how you manage your credit. And with time and with a little work and a little attention, you can definitely see those credit scores improve. So I'll give you an example. If you take a look at a scale, and I know you can't see me, I'm holding my hands up here. I've got a scale in my hands. And if you're out charging on a credit card and the scales are balanced, you've got your credit score and your credit card, the more you charge on that credit card, the lower the score is going to go, right? But the more you pay off that credit and lower those balances and pay on time, that credit score is going to go up. So if you look at it and visualize it that way, the more you are paying off and paying on time, and making sure that you're not overextending yourself, that credit score is going to naturally go up. And it's something that you can watch, which is really great because you can see it go up as it's happening. Again, these the list I was talking about. So the 10 rules for managing your credit is establishing a credit report. And again, if you don't have credit, you can open a credit card. You can get a secured credit card. That's one where you give the company the money in advance, and it's called secured. So that way you're using really your own money, but you're building up your credit. You always want to pay on time, use caution in closing your accounts, and apply for credit judiciously, meaning, just be careful. You don't want to go out and open up a lot of credit quickly because that can get you into real trouble. Time is the key, and demonstrate stability. Again, these lenders are looking for, what your risk is going to be, and have a plan. So if you do need to use credit to buy something, what is your plan to pay that off? And again, making minimum payments on credit cards will keep you in debt for the rest of your life. And so having a plan to pay the minimum balance plus the interest and more will help you to really keep your credit intact and keep yourself out of getting into debt that you can't get out of. And again, put the credit to work for you. Again, you can use the bank's money and pay it off every month, and it can be very good for you, again, because there are advantages to using credit cards, but they've got to be used responsibly, and you've got to really know those terms. Again, what is the interest rate for anything that you're buying? What are the terms of whatever type of credit you're asking for? Take a really good look at that. So for free credit reports and scores, you can go to Experian.com, and you can ask for your, we have some credit monitoring and free credit reports and scores there. You can sign up for that. We do have some programs where they give additional resources to you that cost money, but we do have a free program as well. So you can go in and take a look at that. And then to get your annual credit report, so you can get one credit report per bureau every year. And so you go to annualcreditreport.com, and you can get a report from Equifax, TransUnion, and Experian. You can do that every year. I would suggest that you do that and take a look. If you sign up for the free reports from Experian, you can look at your report more often. But again, looking at your report can really help you manage your finances. You can really see where you're at, see what's on your credit report. But also, if any of you were on the webinar last week with my good friend Mike Brummer, you can see if any bad activity is going on your credit report, if someone has stolen your identity or opened up an account that doesn't belong to you. So it's really good to keep an eye on your credit and know what's happening with it, not just annually, but I don't know, weekly, monthly, whatever fits for you. But it's a good idea to know what's going on that credit report. We have some other educational resources online. So if you go to these different, and Dress for Success has this deck so they can get you this information, but there are credit chats that happen weekly, and those are just live, fun credit chats about credit. We get different experts in, and it's just really fun way to learn more about credit. We have Credit Chat live on YouTube. And then, of course, at Experian.com, if you go to the credit education section, there are hundreds of blog articles about everything you can imagine. Every question you probably have ever had, there's probably a great blog article that will talk about that. It talks about credit and divorce, credit, just losing your job, all these different things. It will have information that will help you kind of navigate credit and answer any questions that we have not answered here today.